Okay, for this video, we're going to cover the net investment income tax and specifically the IRS Form 8960 that is to be included with your Form 1040 tax return. So I've got a sample form in front of us that we'll go through with the return, and then a slide here that covers the rules and some examples that we'll look at when we reference the actual form itself. So what is the NIT, the 8960? Who needs to file it? Well, Form 8960, the net investment income tax, is filed by taxpayers when their modified AGI or modified adjusted gross income exceeds certain thresholds. And so if you're a high income taxpayer and your income is above these thresholds, then you have to pay an additional 3.8% tax on your net investment income. Okay, so this doesn't apply to everybody. You have to check what your filing status is and what your total modified AGI is. And if you're below those amounts, you can ignore this form. It doesn't apply to you. If you're above those thresholds, then you need to be mindful of this, file it, pay the extra tax in order to be compliant. So a taxpayer's modified adjusted gross income is generally going to be the same as their AGI. The modified adjusted gross income amount can be arrived at if you make adjustments for exclusions from gross income under Section 911. So that's the foreign earned income exclusion. So if you're an expat and you're filing a Form 2555, you're going to have to adjust your AGI to arrive at your modified adjusted gross income in order to calculate this tax. And then there's also carve-outs for earnings from PFICs or CFCs under Subpart F income or GILTI inclusions. Stuff like that. So, yeah, generally it's going to be the same number. But if you find yourself in one of these positions where you have foreign earned income or interest in PFICs or CFCs, you can make adjustments for those. So what is your net investment income? That's your interest, dividends, rents, royalties, capital gains, and flow-through earnings from passive interests in partnerships, S-corps, and trusts. And the reason why I've highlighted or bolded rather, an underlying passive interest, is if you're an owner in a business and you actively participate in that business and you have that line 1 ordinary income, if that is active income to you because you materially participate, it's not passive income included with this schedule. It's only if you're an investor in one of these pass-through businesses, you have pass-through income, and because you don't materially participate in the operations, it's a passive activity to you. Okay, so that's why that distinction is made there. Very important to be careful with that piece. So what are the filing thresholds? If you're a single filer or your HOH, head of household, your modified adjusted gross income has to be above $200,000 in order to be subject to this tax, this additional surtax. And there's the thresholds for married filing joint and married filing separate. Okay, so if we look at an example where you wouldn't have to file this, let's say we have Sally here. She's a single filing taxpayer with AGI of $75K. Her investment income was $250 of interest that she earned on a savings account, and then she had $800 in dividend income. In this situation here, Sally doesn't have to do an 8960, and she's not subject to the 3.8% tax on her investment income because her total AGI is below this threshold, right? So she can ignore it. It's only if your modified AGI is above these amounts that you have to bother with this. Okay, so let's look at our example here for John. So John is a single filing taxpayer with a W-2 salary of $200K. He has $1,200 of interest income, and he has $20,000 in pass-through earnings from a partnership, which he materially participates in the operations, right? So this is not a passive activity for John, okay? So John's modified AGI is 221,200, so he has to complete the 8960. So let's look at the 1040. I want to look at page 1 first so we can get a sense of what John's tax profile looks like. So we've got his wages up there of $200,000. There's his taxable interest. And in line 8 here, we have the other income. That's the $20,000 in pass-through investment earnings from his interest in a partnership, right? So that's ordinary business income. So line 1, if we're looking at a K1, line 1, ordinary trader business income. But John does not materially participate in the company, so it's a passive activity to John. So his total AGI is 221,200. Okay, so John's above the threshold, so he needs to do the 8960. So if we jump down to the 8960, here's the NIT form. Complete part one with all the investment income that John has, right? So he has taxable interest of $1,200. He doesn't have any dividends or annuities. And on line 4A, we report all of the income coming through from a passive business, right? So that's the $20,000 in pass-through income from his Schedule K1. But we have an adjustment here to reverse out the amount derived in the ordinary course of a non-Section 1411 trader business, right? So because John actively participates in this business, we can reverse it out. So the inclusion here is 0. Now, if this was a passive activity to John, we would not have an adjustment here for 4B, right? So if he was just a purely passive investor, didn't actively participate in the business at all, did nothing, he just contributed capital, we would see the $20,000 item here on 4C, and so the total NIT would be $21,200. But in this case, we don't have those pieces there, and so the total net investment income that John has for this year is $1,200 related to the interest income. So down in part 3, we have the tax computation. His net investment income, $1,200. There's his AGI. The modified AGI, again, is the same as his standard AGI, 221,200. His filing status threshold, remember, he's a single filing taxpayer, so $200,000 is the threshold for 2020. And so we have the smaller of line 12 or line 15. So in this case, 12 is $1,200. Line 15 is $21,200. So the smaller amount is the NIT there, the NII, the net investment income. And then here's the net investment income tax. So 3.8% times 1,200. That's how we arrive at our $46 figure. And so the $46 figure for the additional tax is ultimately reported here on Schedule 2. All right, so Schedule 2, additional taxes, Part 2, other taxes. We've got it down here on line 8. And then you check the box for 8960, right? So that lets the IRS know that, hey, the additional $46 is attributed to this form for the net investment income tax. Right, and then ultimately all the way up to page 2 of the 1040, we see it there, right? Line 23, the extra tax. So he owes $47,749 in federal income tax computed on his taxable income, and then he tacks on an extra $46 related to the NIT, and that is his total tax liability for the year. Okay, so that covers it. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.